Hello, everyone. Hope you had a good week. I thought I'd do another one of these stock market updates, what's happened over the past week, just to help you out. So let's get right into it. I'm going to share my screen here so you can see the charts, etc. So the performers over the past week have been the likes of Life Healthcare up over 13%, the SPAR Group up 8%, over 8%. Richemont again up another 7%, having a really good year so far. Richemont, Vodacom up 6%. There was talk of Vodafone perhaps doing something there with their shareholding in Vodacom. Truworths up 5.5% and Woolworths up 4%. So all of those looking good in the past week. On the other side of the coin, we've seen the platinum miners and the gold miners not looking so good in the last week. Anglo American Platinum down 7%, Anglo Gold Ashanti down 6%, Goldfields down 3%, Sibanye-Stillwater down 3%, and Impala down 3%. All of this is on the back of really a stronger US dollar. So if we look at this chart here, this is the US dollar. And as you can see over the past, since the beginning of February, the US dollar started picking up again. And that's usually not good for the platinum price or the gold price, because more so the gold price is seen almost like another currency. So in other words, when the dollar gets stronger, the gold price usually gets weaker. I'm just generalizing. It doesn't always happen like that, but generally that is the case. So why has the US dollar been increasing? Well, we've seen inflation coming down in the States, but not as quickly as some would have hoped. So the rate of decrease in inflation rate is not accelerating, which the Fed would like to see. Also, we've seen the US economy is still strong. So that's probably the reason why the US dollar has been pretty strong over the past week. Then just looking at some more charts here, I just thought I'd show this is the gold price. As you can see, it hit a high of about $1,953 at the beginning of February, and it's gone all the way down now to about $1,820. So, and that's obviously affected the gold mining stocks. What else do we want to talk about here? So if we look at the offshore stock markets, the S&P 500 is still having a good year so far, but nowhere close to its highs that we saw towards the end of last year. And then just in terms of the trading statements on the local stock markets that we've seen, just a quick chart of the local stock market. This is the South African Top 40 Index, close to record highs. Again, that's on the back of things like the Richemont and Naspers, etc. Also, the weaker rand has been the weaker rand again on the back of a stronger US dollar, and also the problems that South Africa is facing with load shedding, the Transnet, etc. We have seen some trading statements over the last week from some companies. This morning, we actually saw a pretty good trading statement from Discovery that looked pretty decent. Also, Absa Bank releasing a pretty decent trading statement this morning. I thought Dis-Chem released a trading statement this morning as well, which I thought was mediocre, not really shooting the lights out there. Anglo Platinum released a trading statement this week, which was not good. There were lower sales volumes out of Anglo Platinum, and again, combined with the low platinum price, being hit quite hard, the share price over the last week. And then we saw Pick n Pay. The market, they released a trading statement, and the market was a bit spooked by the amount of money that they're having to spend on diesel and generating their own electricity because of the problems with Eskom not providing sufficient electricity. So to mitigate the load shedding, they're spending about 60 million rand a month or so on diesel. That that's going to affect their earnings going forward. So They are working on solutions there, though, must be said. And I think they will eventually sort it out in some way or other. Then we saw South32. They mine aluminium and manganese, amongst other things. Also, pretty good trading statement out of them. Looking good there. And while we're talking about load shedding and the electricity problems we have here in South Africa, my personal feeling is that we need a lot more competition. It seems a bit crazy to me that there's only one electricity provider in South Africa. If you look at New Zealand, they've only got 5 million people, and they've got 5 electricity companies, 2 of which are completely private. So yeah, I think we need desperately more competition in South Africa when it comes to both electricity and other infrastructure, railroads, the ports, etc. But while we're on the topic of electricity, there are some companies that will benefit, that we think will benefit from the electricity problems. Specifically, there's a company called Mahube Infrastructure. I hope I'm saying that correctly, MAHUBE. They have solar power plants, so that's an interesting one. They are listed on the JSE. There's also Reunert, REUNERT, Reunert. They could benefit from the whole problems with electricity, as well as Hudeco. So interesting to maybe have a look at those ones. And then lastly, I just wanted to discuss a new investment product that has been released from Investec. You can buy these, it's called a structured product. You can buy them in your AfriFocus share portfolio, which we do, obviously. You buy it the same as you buy any other share, although you would need to apply through me. So quite an interesting one. It's a 3.5-year product, and you'll earn a minimum of 40% return in Rand if the market value of the index, of the S&P 500 index, is flat or positive by up to 40% at maturity, plus uncapped upside above 40%. Now, here's the nice thing. It's 100% capital protection in Rand, provided the index has not fallen by more than 30% from the initial index level. So basically, you're betting on the S&P 500 not falling by more than 30% from where it is now. I think so. I think that is quite unlikely, but some may disagree with me there. So here are some scenarios of what could happen. Let's say after the 3.5 years, the S&P 500 is up 5%. You'll get your 40%. Let's assume you invested 100,000 Rand initial investment. After 3.5 years, you'll get your 40%, 140,000 Rand returned to you. If the S&P 500 is up 35%, you'll still get your 40%, 140,000 Rand returned to you. If it does more, if it does 48%, you'll get 148,000 Rand. Looking at a sort of if it does 0%, you'll still get your 40,000 Rand, your 40% return there. So this looks pretty good to me. If the S&P 500 is down, negative, below minus 15%, then it's capital guaranteed, so you will get your 100,000 Rand back. If it's down 29%, you'll, again, capital guaranteed, so you get your 100,000 Rand back. And only if the S&P 500 drops by more than 30%, in this case minus 35%, then you'll absorb that loss and you'll take the 35% knock. So something to think about, an interesting one there. If you'd like to chat to me about that, or have any other comments about some of the stocks that I mentioned, or if you'd like to have a chat or have any questions, feel free to post some comments below, or you can email me at warrenes@afrifocus.co.za. That's where I work. I'm a stockbroker at AfriFocus here in Sandton in Johannesburg. So I would love to hear your comments and hear what you think. So I hope you have a good weekend. Hope you found some value in that, and we'll see you next week.